Are you confused about what stocks to take a closer look at in the fourth quarter of 2021?
Yes, I am. 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 Yes, I am.
Don't worry, I'm here to help you out. November and December are historically strong months for the stock market in general, and many stocks are trading at a discount heading into this time period each year. But how do you actually find stocks that are a good value and have a good long-term outlook?
Throw me a frickin' bone here.
Today, we're going to look at 3 stocks I think are potentially good additions to your dividend portfolio heading into the end of the year.
Well, come on, tell me more.
Okay. Sit back, strap in, and enjoy the ride. Welcome to Constant Cash Flow. I'm Jonathan, and I talk about creating passive income to make your time and money actually work for you. Smash that like button, subscribe, and click the bell for notifications so you don't miss any upcoming content. Now, let's get back into it. I wanted to look at 3 stocks I believe are a great investment right now to hold for the long term. For this video, I chose stocks in 3 different sectors as well in order to maintain diversity in your portfolio.
No, my dear, you've got to diversify.
To be totally transparent, I already own all 3 stocks coming into the month of October, but I chose to increase my position in each one. We'll go through each of the stocks, and if you've watched any of my other videos, you know what I look for in a good dividend stock. If not, I would encourage you to watch my video on the dividend snowball effect, where I go into much more detail on the criteria I use to select my holdings. The last thing you want to do is select a stock that has no long-term upside and leave you kicking yourself down the road.
No, God! No, God, please, no! No!
I'll drop a link in the description below. Now, let's dig into the details and see why I selected these 3 stocks. First, let's start with the healthcare sector. Anyone that's listened to other videos of mine knows that I love AbbVie, ticker symbol ABBV, but we're going to go down a different path today. We're going to look a little more closely at Gilead Sciences Incorporated, ticker symbol GILD. Gilead Sciences is a large-cap biopharmaceutical company that's been in operation for more than 3 decades, with a presence in more than 35 countries worldwide. It's best known for producing medicines that treat life-threatening diseases, including HIV, hepatitis B and C, and cancer. It has a market cap of $84.92 billion, and in the trailing 12 months, it generated $26.6 billion in total revenue. Gilead's solid drug franchises in the HCV and HIV categories translate into high profitability for the enterprise. This puts them in a great position for ongoing dividend payments and increases, driven by strong gross and EBITDA margins. In fact, Gilead's 53% EBITDA margin sits well ahead of the 6% sector median. Gilead's net income margin puts it solidly in the middle of the pack when compared to its big pharma peers. Their net margin of 19.4% sits squarely above that of Novartis and AbbVie, and just below that of Pfizer and Amgen. Gilead's strong margins are driven by its HIV and HCV portfolio, which is ideal because it requires only a small sales force and is inexpensive to manufacture.
Oh my God! Wow!
It pays a respectable 4.25% dividend yield that's well covered with a low payout ratio against free cash flow of 47.5%, leaving it plenty of room to grow in the future. And it has an impressive 5-year CAGR of 9.3%. I see value in Gilead Sciences at the current price of just $67.31, with a bargain forward price to earnings ratio of 9.22. While analysts expect earnings per share to decline by 6% next year, due in part to an expected decline in its drug remdesivir, growth is expected to pick up thereafter with 5 to 10% annual growth in the 2023 to 2024 timeframe. Analysts have a consensus buy rating on Gilead with an average price target of $76, and Morningstar has a fair value estimate of $81. Taking the average of the two, I arrive at a price target of $78.50, implying a potential 20.8% 1-year total return including dividends. That's something I can jump on board with. Yes. Now, as a dividend growth investor, is there anything better than finding out that your next dividend payment from a company is going to be even higher than you expected? That's exactly what happened in 2021 with my second pick, Store Capital Corporation, ticker symbol STOR. While I was expecting a 5.6% increase in the quarterly dividend to 38 cents per share, Store Capital did much better and rewarded shareholders with a 6.9% increase to 38.5 cents per share. Store Capital is a REIT, or real estate trust, that sees growing dividends supported by a growth in revenue and free cash flow. All of Store's properties are now open for business post-pandemic, and the company's monthly rent and interest collections are up by over 96% for the second and third quarters of 2021. My view on Store stems from its rapid revenue growth, up 14% in quarter 2 of 2021 compared to the same time period in 2020, and continued strong growth prospects. The company's real estate is rented to service-oriented tenants operating in a variety of fields. When these companies do well, Store experiences growth in its share price, revenue, free cash flow, and in turn, you guessed it, dividends.
I'm so proud of you.
At current levels, the stock's valuation looks fair and it offers mid-single-digit growth potential. So, let's discuss why I believe that Store Capital is a safe, sound investment where a reasonable total return can be expected in the upcoming years. Store Capital manages real estate all over the United States in a wide variety of sectors: restaurants, movie theaters, health clubs, early childhood education centers, furniture stores. With around 2,738 properties, the company's still growing at a fast pace, having already achieved a strong revenue CAGR of 10% from 2015 to 2020. Similar to Realty Income, ticker symbol O, Store is also a triple net lease play. That means property taxes, insurance, and maintenance costs are borne by its tenants, not Store Capital itself. More than 90% of its leases are long-term in nature, with a lease duration of over 17 years on average. Store Capital is seen as a strong, growing leader in this space, and Christopher Volk, the executive chair of the company, has more than 30 years of experience in real estate.
That's 30 years.
If you're a follower of Warren Buffett, and any good stock investor should be, you probably already know that he holds a sizable position of Store Capital. His Store position is about $0.8 billion as of this video. And while that's not the largest holding by far in his massive portfolio, it is significant for two main reasons. Number one, Store is the only REIT holding in his entire portfolio. Yes, you heard me. He doesn't even hold Realty Income, the super popular monthly dividend-paying REIT. And number two, his holdings are about 10% of the total outstanding shares. This is a strong endorsement of Store Capital and its future business. It pays a solid 4.46% dividend yield, and REIT rules require that it pays 90% of its taxable income each year as dividends to its investors. It has a 5-year CAGR of 5.9% and has increased its dividend payout for 6 consecutive years, including through the pandemic. I see great value in Store Capital at its current price of $34.74. Analysts have a consensus buy rating on Store as well, with an average price target of $36, and Morningstar has a fair value estimate of $37. Taking the average of the two, I arrive at my price target of $36.50, giving us a potential 9.5% one-year total return, including dividends. Nothing like a good Karate Kid clip to get you psyched up. But seriously, let's move on to our third stock. We're going to review Star Group, ticker symbol SGU. Star Group is a full-service provider that sells home heating products and services. Its stock has appreciated 14.4% over the last year. This is mainly attributable to a strong rebound in the global oil market due to a significant revival in industrial production and oil production cuts implemented by OPEC and its allies on the supply side. When looking closer, this stock has gained 5.65% over the last month and 17.32% year to date. For the fiscal 2021 third quarter, Star reported a 21.9% increase in total revenue to $283.1 million, compared with $232.2 million in the prior year period, reflecting an increase in selling prices, higher volume of motor fuel and other petroleum products sold, greater installation and service revenue, partially offset by a lower volume of home heating oil and propane sold.
And I sell propane and propane accessories.
The company's recent strategic acquisition of propane dealers, coupled with its continued focus on streamlining their cost structure, is further driving its financials. Moreover, with better than expected recent quarter performance, I believe that this stock is worth a solid look for long-term investors. It pays a respectable 5.16% dividend yield that's extremely well covered, with a low payout ratio against cash flow of 16.1%, leaving it an insane amount of room to grow in the future. It also has a 5-year CAGR of 6.84%. I see tremendous value in Star Group at its current price of just $11.25, with an extremely conservative forward price to earnings ratio of 6.72. Analysts also have a consensus buy rating on SGU, with an average price target of $13 and a Morningstar fair value estimate of $13 to match. This implies a potential 20.7% one-year total return, including dividends.
20.
20?
That wraps up our look at 3 stocks you should consider adding to your portfolio heading into the end of 2021. As always, please do your own research before making any investments to see if it's a good fit for you, your goals, and your personal risk tolerance. Now, keep an eye out for my next video coming out later this week that talks about dividend ETFs as an alternative to individual stocks and the pros and cons of each approach. Thanks for watching. Let me know in the comments what you thought about today's video and what you'd like to see discussed in future videos. I want to make sure that I'm putting out content that you want to see, and I really value your input. I'd appreciate it if you could leave a like and subscribe to the channel if this video helped you in any way. When you subscribe, also drop a comment saying I subscribed. I give a shout out to random subscribers